Most people want to invest, but they never actually take the first step because buying your first investment feels complicated. Apps, charts, risk, choosing the right stock. So they wait, and months turn into years, and they still haven't started. But here's the truth. One of the simplest ways to start investing is not picking stocks at all. It's buying something called VOO. And in this video, I'll show you exactly how to buy VOO step by step, even if you've never invested before. No jargon, no confusion. Just a clear process you can follow today. And stick around, because I'll also show you why VOO is often recommended for both beginners and even experienced investors, including millionaires. Let's start from zero. So what is VOO? VOO is an ETF, which stands for Exchange Traded Fund. But don't let that word confuse you. An ETF is just a basket of investments. And VOO is a very specific basket. It tracks something called the S&P 500. The S&P 500 is a group of 500 of the largest companies in the United States. Companies like Apple, Microsoft, Amazon, Nvidia, and many more. So when you buy VOO, you are not buying one company. You are buying a small piece of 500 companies at the same time. That means your money is automatically spread out. So instead of trying to guess which company will win, you are investing in the overall growth of the US economy. That's why VOO is so popular. Now, before you can buy it, you need something called a brokerage account. Think of it like a digital wallet for investing. This is where you deposit money and buy investments like VOO. Popular beginner-friendly platforms include Fidelity, Vanguard, and Charles Schwab. You don't need to overthink this step. They all do the same basic thing. Let you invest your money. Opening an account usually takes about 10 to 15 minutes. You enter your personal information, link your bank account, and verify your identity. That's it. No approval process. No experience required. Once your account is open, the next step is adding money to it. This is called funding your account. And here's something important. You do not need a lot of money to start investing in VOO. You can start with $10, $50, or $100. What matters is not the amount, it's building the habit. Now here's how you actually buy VOO. Inside your brokerage account, there is a search bar. You type in VOO. It will show you the ETF managed by Vanguard. Then you click buy. You choose how much money you want to invest. Most platforms even let you buy fractional shares, meaning you don't need the full price of one share to start. So even small amounts work. Now here's where most beginners get it wrong. They think investing is about timing the market or finding the perfect moment. But VOO is not about timing, it's about time. Because VOO is designed to track the market long term. It goes up and down in the short term, but historically, over long periods, it reflects the growth of the economy. That's why it is often recommended for beginners, and also used by experienced investors and even millionaires. Because it is simple, diversified, and long-term focused. Now here's the biggest mistake beginners make after buying VOO. They check it too often. If it goes down, they panic. If it goes up, they get emotional and want to change strategy. Both reactions usually hurt long-term results, because successful investing is not about reacting, it is about staying consistent. The real power of VOO is not in short-term movement, it is in long-term compounding. That's when your money earns returns, and those returns start earning returns too. And over time, that growth builds on itself. So here's the simple step-by-step system. Open a brokerage account, fund it with a small amount, search for VOO, click buy. If you can't buy a whole share, many brokers allow you to buy fractional shares for as little as $5 for a small piece of VOO or other investments. Robinhood, Webull, Fidelity, Charles Schwab all allow this. Robinhood is easiest for beginners. Webull has great charts, and Charles Schwab does as well. And hold it long term. That's it. No complicated strategy. No stock picking. No guessing. Just consistency over time. Most people never start because they think investing has to be complicated, but simple investing done early usually beats complicated investing done late. So if you take one thing from this video, let it be this. Start small, stay consistent, and give time a chance to do the work.